All right, I'm gonna start in another minute or two. Just gonna wait for a couple more people. All right, let's get this started. So for those of you who are familiar with Nimoy, I hope you excuse me. I'm gonna go a little more on the tutorial side for everybody new that isn't quite aware how this works. So you know, if a lot of the things that I speak about you already know, just excuse me for that. But then at the end, I'm gonna get into what I think might actually happen here. I actually was seeing this possibility for a long time, but I was not optimistic about it. I didn't think it would happen, but I was keeping it in the back of my mind. And then with the news today, it really does seem like it might happen. So that's kind of what I want to talk about today. But to start, for everybody on that's new, if you have any questions, please feel free to ask. Okay, so let's get started. So quick Anemoi review. What is Anemoi? How do we use it? What are the benefits of it? So really quick, there's a couple of ways to trade with Anemoi. If you just want to trade with like the 1 and the 5 minute trigger, then you know when the 1 minute trigger crosses below the 5 minute trigger, that's bearish. And then for example, like I don't want to say this about GME because I have never bought a put on GME in my life. But you know, when the 1 minute trigger crosses down below the 5 minute trigger, that's when we like to go short. Let's say we're playing SPY or the rest of the market, and we'll take this short as soon as they cross, and we'll ride it down. Our stop loss will be if price breaks above the 1 minute trigger. So you can see once the 1 minute trigger crosses the 5, we could have rode this short all the way down, right? So that's one way you could use Nimoy. Another way you could track velocity. So this is something we like doing a lot. We look for divergences. So Nimoy always tells you whenever a market is about to bottom, whether it's on a small time scale like the 1 minute, or if you have hourly divergence or daily divergence, but just a real demonstration how this works. So let's remove even the triggers for a second. Let's look at the 1 minute velocity. Okay, so price is coming down here, and here's your most extreme print on this leg down after price breaks above the 1 minute trigger. So you can see the velocity is growing to the downside, growing to the downside, growing to the downside, and here's your most extreme print. So look at the 1 minute velocity. It shows a reading of 0.035. All right, and price at the time is 26.30. So what you're looking for is 3 new lows, and then there's going to be a reversal. So here's your first new low, and it's only a bullish divergence, right, if velocity doesn't make a new low. So from here to here, price makes a new low, but velocity doesn't. So that's your first bullish divergence. Then we make this second low right here. Velocity does not exceed this print. That's your second bullish divergence. And when we come down here, that's your third bullish divergence. That tells you price is about to reverse. On the 5 minute level, it wasn't that obvious, but here's your most extreme print. And then price comes down while velocity does not. So that tells you it's in fact bullish. And you can see the reversal that price makes. Now this doesn't only work on the 5 minute and the 1 minute. And again, I'm going to get to GME. I'm just giving a very short demonstration in how Nimoy works before I get into it, because I want everybody to be able to understand what I'm going to say next. So let's say, for example, we look at the daily time frame, right? So you guys understand 1 and 5 minute divergences. Let's look at daily divergences. Okay, so here's the daily trigger, and you could see that the daily velocity was most extreme back here. You know, it's starting to cut off because it's only 6 months at a time. But you can see that right here, right? If I remove everything else, you can see that the most extreme print is definitely this one. Okay, and price at the time was 942. Then price comes down and makes a new low, and that's your first bullish divergence. Price comes down, makes a second low. That's your second bullish divergence because velocity is not making new lows. And when price makes this third low right here, that tells you it's the bottom because you have 3 bullish divergences, and then you end up getting this move. And if you remember what I was showing you before with GME with the 1 minute trigger and the 5 minute trigger, same thing works for the hourly trigger and the daily trigger. Once the hourly trigger crosses above the daily trigger, that's when you usually get these squeeze type scenarios. And you can see BBBY actually, you know, once the hourly trigger crossed, that's when it went from 5 to 30, and that's when we went long. And if I pull another example, let's look at AMC. And again, in a couple of minutes, you'll see why this all pertains to GME. But for example, you have AMC here. The hourly trigger crosses the daily trigger, right, at about $6. And then you get this humongous move to the upside. But then again, on the downside, it works the same way. When the hourly trigger crosses below the daily trigger, like it did right here, you get these powerful moves to the downside. Okay, so hourly trigger, daily trigger is just the same as 1 minute trigger, 5 minute trigger. So there's a lot of, you know, ways to use Anemoi. Everybody likes looking at them different. We're going to talk about another setup right now called an airplane setup. Okay, an airplane setup, and again, this is, try to pay attention to this because this is important to what comes next. Airplane setup is when the hourly trigger comes down to the daily trigger, but then reverses off of it. And when you get this kind of action, the hourly trigger and the daily trigger, it leads to very powerful explosive moves to the upside, which is what we saw right here. In fact, you get the exact same thing when the 1 minute trigger, comes down to the 5 minute trigger and reverses off it. It's also called a airplane setup, and you get, you know, nice powerful moves to the upside. So let's see if we have one right here. Not really such a good example, but you could see how the 1 minute trigger came down to the 5 minute trigger, and then price went up, and then the 1 minute trigger came down to the 5 minute trigger, came back off it, and price went up again. And then you can see once it crossed, it was just down for the rest of the day. So now, how does this pertain to GME? All right, so it's very clear that a 1 minute trigger, 5 minute trigger airplane is powerful, but you know, nowhere as near powerful as an hourly trigger, daily trigger airplane. But what's the most powerful in the entire Nimoy setup, right? The most powerful moves that you'll see are weekly trigger, monthly trigger airplanes. So that's when the weekly trigger comes down to the monthly trigger, like it did right here. So the weekly trigger was coming down, and then got close to the monthly trigger, was $2 away, and then started lifting again. And as soon as it started lifting off the monthly trigger, that's when price made this explosive move up. However, the closer the triggers are together, all right, the closer the triggers are together before it starts lifting up is all the more powerful the move is. So for example, if the weekly trigger would lift off the monthly trigger now, you would see a move maybe 2, 3, 4 times greater than you did here, greater than this move to the upside. However, how are we going to get this weekly trigger, monthly trigger airplane? You know, it kind of seemed impossible at first because price was just, if I remove this, you can see that price was just under the daily trigger this entire time period. The daily trigger was basically a wall keeping price underneath. But we could also see that as time went on, the negative daily velocity, as each week that moved on, became less and less negative. And so sellers are just about ready to lose control. Now, when GME has positive daily velocity, when any stock has positive daily velocity, really good things happen. Like look at this time period where GME basically had all hourly good, positive daily velocity. If I remove everything else, you could see that we were in a pretty steady uptrend. You know, we ended up going from when we crossed the daily trigger, we ended up going from 27 to 47, which is a really nice, powerful move to the upside. And you could see how the daily trigger caught price and brought it back up. That's because we had positive daily velocity. So the daily trigger acts as a support. Again here, and then again here, price, we had positive daily velocity, and price came down and launched right back up over. So the daily trigger, really, really strong. and now where price is currently. All right, so we rejected here, but now if I really zoom in, you'll see that tomorrow's print is the least negative velocity we've had ever since right here. All right, so ever since GME started selling on August 22nd, when this run ended, we now have the least negative velocity we've ever had. So a break above 26.22 is very possible tomorrow. And when a price breaks above the daily trigger, you know, find hundreds of examples of this, but it usually starts a really nice run. So you can see price broke down below the daily trigger, and you see how strong that move down was. Let's zoom in on this. See, so daily trigger has a lot of importance. It probably won't find anything bullish in the market that we're currently in, but here, this is a good example. Price breaking above the daily trigger and going on a really nice move from 80 bucks to 104 bucks. So again, you know, GME getting above the daily trigger is the first step, okay? But the problem is that we know how when there's strong velocity, the triggers are gonna really act as strong support or resistance. So over here we had positive velocity, the trigger was acting as strong support. Over here we had negative velocity, the trigger was acting as resistance. Right here, right here, right here, right here. So let's remove the daily trigger, all right, and let's bring up the monthly trigger, which is at 29.28. Let's bring on the monthly velocity. Okay, and we can see that monthly velocity has been really nasty this entire month, all right? So Nimoy told us we have negative monthly velocity, and so price has like kind of been repelling off this monthly trigger. And you know, before I get into this, I just want to say one thing, because somebody just asked a great question. He said, during negative daily velocity days where price is under the blue trigger during the last uptrend, how do you stay convicted? So let me show you. So you see how price broke below the daily trigger right here? Okay, so how do we stay convicted? How do we know that price is going to keep bouncing? So first of all, notice when price broke under the daily trigger, all right? It wasn't on any of the days where we had really strong daily velocity. You see this print right here, 0.5, 0.45, 0.29. It wasn't on any of these days. We broke under the daily trigger when velocity was very, very low, 0.03. All right, so it's not 0.1, 0.0. So, you know, when you have 0.03 on the velocity, price can break below the daily trigger, but look at this, all right? Let's remove the daily velocity. Let's put on the monthly velocity. The monthly velocity was positive during this time period. So because the monthly velocity is positive, we're gonna expect the monthly trigger to provide support, which it did right here. So even though price broke below the daily trigger, we knew we had the monthly trigger as support, and so we're able to buy this, knowing that it was gonna act as a trampoline setup, even if price goes below, to launch price back up. But the predicament that GME is stuck in right now is that because we have such strong negative monthly velocity, even if price was able to break above the daily trigger and shoot up to 29.28, you know, Anemoi is predicting we're going to get rejected hard off the monthly trigger. But pay attention to what day it is in the month, all right? So today is October 27th, and in 4 days, the monthly velocity gets recalculated, okay? So it always gets calculated at the end of the month. Now, if GME, all right, now again, a series of events needs to happen in a perfect order and a perfect, however you want to call it. It needs to go perfect, but if it does, we're gone, all right? So this is what needs to happen. GME needs to break above the daily trigger immediately at 26.22, hopefully tomorrow. That's the best case scenario. If it can get close to 29.98 in the next couple of days before November 1st, then we can erase this entire monthly velocity print. And going into next month, we can even have positive velocity or teeny negative velocity that won't stop us from going straight through this monthly trigger. Now, it's important to note that the monthly trigger is a really big acceleration level. All right, so you see how here, once you broke above the monthly trigger, we stayed above it for 4 months. Once you broke below the monthly trigger, we stayed below it for 2 months. Breaking above the monthly trigger is a huge deal for the macro outlook on Nimoy to remain bullish for more than a couple of weeks, to remain in a point where you're not scared of a rug pull every night when you go to sleep because you're saying to yourself, I'm above the monthly trigger. I know I have tremendous support beneath me. Okay, So if GME in the last couple of days of the month can move up towards 29.98, we can erase this entire negative monthly velo, and next month, which is next week Tuesday, even have positive monthly velo. Now let's look at the weekly. All right, the weekly trigger right here at 30.63. Look at the weekly velocity. The weekly velocity has actually been repairing in the same way that the daily velocity has. So right away, I mean, what Nimoy has been telling us the entire time is through this sideways movement, it has not been sellers that have been in control. Because if it was sellers that are in control, the negative daily velocity would have been getting worse and worse and worse. It's absolutely buyers that are in control here. And even if we keep chopping around in this range, Nimoy is telling us that buyers will win because of the receding negative daily velocity and because of the receding negative weekly velocity. But you can see that's still really strong negative. So if price were to attack 30.63 tomorrow, Nimoy is telling us it will reject almost automatically. And even if it goes above, Nimoy is telling us that price wants to pull back down to 30.63 throughout this entire week. But what day is tomorrow? Tomorrow's Friday. So tomorrow, Friday, if price can push up and close anywhere close to the weekly trigger, again, we can erase this entire negative weekly print, and going into next week, we can have either positive or only slightly negative, like it is here. So tomorrow and Monday are the two most important trading days per GME in this entire 6 months period to shape the macro outlook on Anemoi. And trust me, the macro outlook on Nimoy is a huge deal. Look how, it's pretty simple, you know. Bring back the monthly trigger. Let's erase everything else, right? Above the monthly trigger, good. Below the monthly trigger, bad, right? Very simple. Weekly trigger. So, again, throughout this entire time period, GME was actually thrashing with some negative weekly velocity and was never really able to form positive weekly velocity. Because if you look closely, towards the end of the week, they take price down, making the weekly velocity less positive. It happened a bunch of times. Towards the end of the week, they kept taking price down. And then if we look at the daily trigger, again, like it tells a story. So RJ asks, how far would you expect to see big ups if we can break and hold above the monthly trigger in the next couple of trading days? Once we break and hold above the monthly trigger, so this is the point I was trying to make. A big part of a Nimoy, which I actually didn't get into, but it's called a 3-trigger cluster. And a 3-trigger cluster is when the 1-minute trigger, the 5-minute trigger, and the hourly trigger all cluster together to form a cluster within like 1 or 2% of each other. So I'm going to show you guys a really good example of what a 3-trigger cluster looks like. So pay attention to this, and then we'll jump back to GME, and I'll tell you why it's so important. Okay, so this is AT&T. Now look over here how all 3 triggers were really clustered together, all right? The hourly trigger was 1491, sorry. The 1-minute trigger was 1493, and the 5-minute trigger was 1487. So they were within 1% of each other. When price broke above a 3-trigger cluster, in the span of 1 week, price ran to a high of 1830. All right, $4 move. So when the triggers get clustered together and price breaks through them, it causes extreme acceleration of price because each trigger is kind of an acceleration level. So for GME, we happened, so again, and that setup, right, it ran $4 off just the 1-minute trigger, 5-minute trigger, and the hourly trigger. If you have a 3-trigger cluster, here, you know what, let me show you a great example of a macro 3-trigger cluster. Let's look at SPY, and this is how we knew to go short SPY all the way back here. All right, so let's zoom in. You see how the hourly trigger, the weekly trigger, and the daily trigger were all clustered together? This was when price was 419, okay? And price sold all the way down to 352 on this 3-trigger cluster setup. So let me show you how this looks. You have the 3 triggers clustered together, all within 1% of each other. 414, 414, and 411.88. When price breaks through 3 triggers at once, it is extremely, extremely bearish on a macro scale, all right? But again, this is only the hourly trigger, weekly trigger, and daily trigger. This isn't even the monthly trigger. Okay, so let's go back to GME. GME has a 2 trigger cluster, all right? And the 2 trigger cluster is the monthly trigger and the weekly trigger, okay? So any move through these 2 triggers is a 2 trigger cluster. This is why I sent out a tweet a couple of days ago. I said any move above 31 can really ignite a squeeze, because if price breaks through the 2 biggest acceleration levels, the reason why they're called acceleration levels is because that's what the triggers do. When price goes through them, it accelerates price. It marks the level. It's an AI that calculates the level on the chart that once price breaks through, there's no holding it back. When price breaks through 2 of those levels, the weekly and the monthly, which are the 2 biggest levels on a Nimoy, the 2 most powerful, strongest acceleration levels. I mean, look at price break through the monthly trigger to the downside right here. It goes from 29 to 23 in a couple of days, all right? In literally a week, because it's strong acceleration. And then, it pins at least away from the monthly trigger for a while. So think about this if we formed it exactly the opposite way. Price broke through the weekly trigger and the monthly trigger. They weren't even clustered together, and we had this negative effect. If price breaks to the upside through this 2 trigger cluster, powerful. We'll have a very powerful move to the upside. Now, the thing is, again, if I bring in the hourly trigger, the hourly trigger and the daily trigger, okay, check this out. We are very close to the hourly trigger crossing the daily trigger, which I've showed you before in BBBY and SoFi are very, very bullish. I mean, let's just bring in this right here. The hourly trigger crosses above the daily trigger, price is 32, and this was on July 8th. And 1 month later, we're trading at, we actually hit a high of 47. Because once the hourly trigger crosses the daily trigger, you are bullish. Once the hourly trigger crosses below the day trader, the daily trigger, you are bearish. Okay, so remember how important these trigger crosses are. Now GME right now, in the past, ever since we had the bullish crosshair on July 8th, we have not had anything close to that until right now. We are as close as we ever were to getting a hourly trigger, daily trigger cross. The hourly trigger is at 25.88 and the daily trigger is at 26.22. So here's what we need to see tomorrow. We need to see price remain above 26.22 for about 4 hours. If we do that for 4 hours, then the hourly trigger at 25.88 will come up every hour, couple of cents, 10 cents, 8 cents, and if it crosses the daily trigger at 26.22, well, then we're bullish without a doubt, all right? Now let me show you something else that's really interesting. Look at the day trader chart. Notice how GME is also in a 3 trigger cluster on the day trader chart. 25.84, 25.86, 25.87, and 25.90. It doesn't get closer than that, folks. This is a really tight 3 trigger cluster, and 3 trigger cluster setups are so powerful that we have a scanner for them that literally just looks for 2 trigger clusters, 3 trigger clusters, and these plays end up working really well. Tell you that much. Now, I wouldn't be fair if I didn't give a bearish outlook, so I'm going to give a bearish outlook right now really quickly, although I'm obviously bullish as hell. If the weekly trigger crosses down below the monthly trigger, then it's a different story. Let's take Meta, for example. Notice how the weekly trigger is below the monthly trigger. It's because the weekly trigger crossed down below the monthly trigger. And for about 6 months, Meta has been nonstop selling. And that's because you have very strong resistances up ahead. Okay, and this chart only shows 6 months, but Meta actually broke through a 3 trigger cluster to the downside of the daily trigger, weekly trigger, and the monthly trigger. And that's why Meta has been so bearish this entire time period, because the weekly trigger crossed down below the monthly trigger, and there's just too much resistance overhead for it to get through. So let's go back to GME. This is why, I'll repeat this again, the next 2 days, Friday and Monday for GME, are the most important trading days, literally that I can remember for tracking the stock, which I've been doing for 2 years. That's why it's such a coincidence that everything happened today, because I've been saying in the Discord for the past couple of days that it's now or never, folks. It's now or never, and then all of a sudden you have 115 million shares borrowed literally the day before we either come up and get this hourly trigger, daily trigger cross, which will turn us bullish, come up to the monthly trigger, weekly trigger, which will erase the negative weekly velocity and will erase the negative monthly velocity. Right when we have, you know, a 3 trigger cluster setup in a Nimoy, that if it turns bullish, you know, it could launch price. So right here, you know, I mean, we kind of close the day in a bullish 3 trigger cluster setup, but if we open up tomorrow above 25.90, which is the 5-minute trigger, we can launch from the get-go. So a lot of interesting things happening right here. But it was just a real shock to me that all of this Ortex stuff happened today, because we were monitoring this very closely. So to recap, and then I'll take any questions that you guys might have. Tomorrow what we're looking for is, first of all, we want to break bullishly out of this 3 trigger cluster setup. So if we fall below 25.85, it'll be a bearish 3 trigger cluster setup. If we break above 25.90, that's bullish. And then the second most important thing is for a price to break and hold above the daily trigger at 26.22. Third most important thing is for the hourly trigger to come up through the daily trigger and cross, and that would turn GME very bullish. And that's when I mean, if there's ever a time to call for calls in the market, you want to buy them after the hourly trigger crosses the daily trigger. I can show you guys 100 setups right now of how well you could have done just playing the hourly trigger above the daily trigger. But either way, so one, we want to break above we want to break out of this 3 trigger cluster bullishly. That's anything above 25.90. 2, we want price to break above the daily trigger at 26.20, which will give us positive daily velocity, which is very, very, very important. 3, we want to get as close to 30.63 to close the week, because the closer we get to 30.63, the more we can repair this negative weekly velocity. And once we repair the negative weekly velocity, we have a real chance of breaking above the weekly trigger at 30.63. And the last important thing is, over the next 2 days, Friday and Monday, we want to get as close to 29.98 as physically possible, which will cause this really bearish print. And by the way, you know, Nimoy told us before the month started that we're going to have a really bearish print. And look what price did during this month. Couldn't go anywhere. Couldn't break out anything. Throughout this entire month, it's just been sideways, no volume, no volatility, because the monthly print was this bearish. Notice this price action for GME. If you look at the rest of the 6 months, do you see anything similar to this price action? No. And that's because the negative monthly velo has not been this bearish. Now, when this month started, all right, so this is July 28th. This is July 29th. On August 1st, Anemoi already predicted a monstrous monthly velocity print. This was on August 1st, okay? So before this run-up from 24 to 30 to 47 happened in this month, on August 1st, Nimoy already predicted that this month had really high monthly velocity. Now, granted, the entire market fell off a cliff on August 16th. If I bring up SPY, you'll see that I'm not making that up. The entire market fell off a cliff then, and so, you know, GME got dragged down a bit August 16th, and then it's been straight down since then. But GME has definitely found a bottom first. Now, last thing before I take questions is, I just want to make myself very clear when I say this. Nimoy was predicted during this month that price would get slammed and make a new low. So remember what I was talking about divergences here. You know what? Let me show you guys an incredible, really quick example of bullish hourly divergence. How can you have called this low? All right, using technical analysis, using anything like that, how can you have literally timed the bottom, which we did, and I'll show you how. Put on the hourly velocity, okay? So price is selling, price is selling, price is selling. So from price, here price was 38.10. When price came down to 34.90, you could see how the negative hourly velocity was getting stronger to the downside. So nothing unusual there. But here was the most extreme print, all right? Negative 0.32. Price at the time was 34.90. Now watch this. Price makes a new low right here. All right, this is one leg down. Price makes a new low. Now price is 30.78, but look at the velocity. Major bullish divergence. All right, now price retraces, one leg down, second new low. But look at the velocity. massive divergence, right? Price is making a new low, but velocity is not. So again, here was your most extreme print. Here was one full leg down, new low, that's one bullish divergence. Then a little bit of retracement, price comes down, second new low. That's two bullish divergences. Once you have three bullish divergence on the 1 minute, on the 5 minute, on the hourly, on the daily, on the weekly, on the monthly, price will reverse. That is the rules of a Nimoy. That is how a Nimoy works. And so the way we like to play things like this is that once you have two bullish divergences, you're furiously buying the next low. And look how well that worked for our group this week, actually, with BBBY. And then I'll hop back and finish off. I don't want to get too distracted. But let's look at the daily velocity for a second on BBBY. So check this out. Here was your most extreme print, and price was $7. Then price retraced, made a new low right here at 592, but the negative daily velocity did not. All right, then price made another new low right here, but the negative velocity did not. So because this was two bullish divergences, we were waiting for a third new low. We were waiting for it because we knew that as soon as we have a third new low, that's going to be our magic number 3 bullish divergences, and we're going to go long. So I was on stream a couple nights ago when price was at 433, and I said, we're going hella long BBBY right now because it's our third bullish divergence. Here's your most extreme print to the downside. Price was $7. Here's your first new low, bullish divergence, your second new low, bullish divergence, and we furiously were buying right here. And in the video I said that I think price is going to attack the daily trigger, which at the time was like right here, $6-ish, and you could see price came and literally almost attacked it. It fell short by a bit, which is kind of normal, because if I zoom out a bit, you'll see that the weekly velocity has been getting worse each week and that the monthly velocity is still pretty bad. So it's kind of normal for price to fall a drop short. But look how well that worked. As soon as it made its third low, right, with a bullish divergence, snapped straight back to the daily trigger. So there's two kinds of divergences, and this is why I am leaning bullish on GME. One divergence is price making a new low, but velocity is not making a new low. And that's what we just saw on GME and BBBY. But there's another kind of divergence, all right? This is a little more complicated, but just try to stay with me. I'm almost done. The other kind of divergence is velocity making a new low, but price not making a new low. So if velocity over here shot up, all right, that's telling us it's expecting price to shoot up. And notice how we got the print here before this entire price movement. So we had the predictive print right here. So on August 1st, our entire group knew we were ready that, you know, we have monstrous monthly velocity. Nimoy is telling us price wants to rip to the upside. Okay, over here, Nimoy was telling us that price wants to crash to the downside, and price did not even make a new low. So during this month, when the monthly velo was negative 1.3, price registered a low of 23.84 or whatever. During this month, when price should have got crushed, it stayed sideways. So that's bullish divergence, all right? So that tells me that, you know, something's definitely going on, and you know, I definitely have a bullish outlook on GME, but you guys know everything I am looking for, and we'll see how the next couple of days play out. So I'm just going to answer a couple of quick questions. Just going to start from the beginning. Someone said price at 26.50 after hours. Is it? Oh, it is. Okay. Well, we'll see where it opens. Okay. How realistic price target for tomorrow? I don't know. We're just going to have to see how it plays out. Haven't been this jacked in months. Well, let's not get jacked until this plays out the way we need it to play out. What are the trigger markers for BBBY? So I can show you, but if you want to follow along on your own, this is entirely free, no charge whatsoever to see these exact same charts. Just DM me for the link, or just Google Nimoy Predictive Technology. But the hourly trigger is at 506, the daily trigger is at 590, weekly is at $9, and the monthly trigger is at 1553. Incredible analysis. I'm sub for Global Pro. Thinking on a Nimoy, but didn't quite understand it. All right, I mean, Nimoy is really useful because even if you don't have any technical analysis, even if you don't want to learn technical analysis, which can take years to learn, Nimoy takes about a week to learn. It's that simple. I have some tutorials on my YouTube channel if you want to check them out. Why does it need to stay above the certain trigger for a certain amount of time? It needs to stay above the trigger for long enough to print a velocity print. So on an hourly level, it needs to stay above the hourly trigger for an hour to print a positive hourly print. On the 5-minute trigger, it needs to stay above the 5-minute trigger for 5 minutes. 1-minute trigger for 1 minute. Daily trigger, price needs to stay above the daily trigger for a full day to get that positive daily print. Douglas said, "Can you please do BBBY as well?" I have done BBBY. There's a video on my channel. Can the massive pile of borrowed shares be used against the stock to prevent a potential run if any of these crosses happen? Okay, so this is very important. All right, Nimoy predictive technology. All these borrowing shares and everything. Once the cross happens, it means that they decided to take it up, not us. Meaning, Nimoy is telling us. Nimoy reverse engineers the algorithms in the market. So the hourly trigger cannot cross the daily trigger to the downside unless they're planning on taking the price. The triggers are telling us what they're doing, not what might happen. If the hourly trigger crosses the daily trigger, they decided that it's time to take up price. There's nothing we can do about it. We can buy calls, we can sell calls, we can buy puts. Nothing's going to work because price will go up because they took it up. Okay, so the trigger crosses tell you where they are taking price, not what might happen. It's automatic. Okay, I mean, once you had this trigger cross, for example, all it told you was that they are now going to take up price. What happens after 3 bullish divergences and the overall market tanks? So I know you said answered my question, but I'll just tell it for other people. You cannot have 3 bullish divergences if there aren't massive buyers. Like, let's look at Mullen, for example, because we called this one too. So for Mullen, right, you have a really good example of weekly divergence. So let's look at the weekly velocity. Okay, here was your most extreme print to the downside. Price was about $1 at the time. And then price came down and made a new low at 70 cents. Then price came down and made a new low at 64 cents. And remember, both of these are bullish divergences because this was your most extreme print. So price is making new lows, but velocity is not making new lows. And then on this third low right here, this is where I started going long at around 24 cents because I knew it was my third bullish divergence. Price rocketed to the upside, up over 150% since then. But the point is that you cannot have divergences if somebody with big pockets is not buying. The only way you can have divergences in the velocity is if somebody is accumulating the stock and ready to take it up. With BBBY, if the moves down were bearish, right? If these pushes down were bearish, we wouldn't see bullish daily velocity. It would just be impossible. Each new low would have a new low on the velocity. The fact that it's diverging, it's predetermined that the stock is going to go up. Nothing in the world can change that, whether the market goes up or down. So you're saying what happens if you have 3 bullish divergences and the market goes down, then you wouldn't have had 3 bullish divergences. Once you have 3 bullish divergences or 3 bearish divergences, price will come down. It's predetermined. It's just telling you if the big guys are loading, if the big guys are not loading. At what price do we need to close at tomorrow for hourly trigger to also close above the daily trigger? So it's not about closing price. It's about remaining above the daily trigger for long enough for the hourly trigger to move. So wherever price is, that's where the hourly trigger is close to. So if price is moving up every hour, the hourly trigger will be moving up every hour. So what we need to do is we need to remain above the daily trigger, above 26.24, and then each hour see how here price is moving up and the hourly trigger is coming up as well. So we need to just remain over 26.22 for 4 or 5 hours for the hourly trigger to come up and cross. And once that happens, really, really bullish. I mean, I don't know how many examples I could give you guys. If you guys want to play around with it, sign up for the free version, search through everything yourself. But like, here, let's look at SoFi. All right, so here's where the hourly trigger crossed the daily trigger. Right here. Here's your cross. So it's predetermined now that price is going to go up. Nothing is going to stop that because they decided to take up price. Now you get your beautiful hourly trigger, daily trigger airplane, which we spoke about earlier is a very powerful setup, and price rockets to the upside. If price wasn't going to rocket to the upside, you were never going to get this airplane. The fact that you got this airplane told us that they want to take it up. Another example of something like that is AMC. That's why Nimoy is so great, because it's not technical analysis. It's just telling you where are they taking the price. So again, hourly trigger crosses the daily trigger. All right, we get this nice move up. We get the shakeout where the hourly trigger airplanes off the daily trigger, and then we roar to the upside. Now this is the hourly trigger and daily trigger. Imagine how much more powerful that is, all right, times 10. It's 10 times more powerful if the weekly trigger airplanes off the monthly trigger. So if GME can get the weekly trigger, which is now coming down to the monthly trigger, to come here and then lift up off again, it's gone, man. GME's gone. That if we're gonna see a squeeze, that's where it's gonna start. I could promise you that. You know, I'll actually show you guys something. Let me show you guys something. 1 second. Hold on. Let me just finish answering the questions. I'll show you guys the squeeze that we once had, and I'll show you guys that it was a very similar setup to now. How do you differentiate between velocity low, price not, and bearish divergence? So here, good question. Let me show you guys an example of the other kind of bearish divergence, where velocity is moving up, expecting price to move up, but price doesn't go up. So here, it'll be easier to understand if I do this. So right here, velocity was 0.026, and price made a high of 553. When the hourly velocity came up during this hour, it means that Nimoy was telling you it's expecting price to go up. If price can't even go up in a high velocity environment, then that's bearish. Because Nimoy is telling you we have really good hourly velocity, price should go up. So if price can't even go up during this hour, then that's bearish, and you could see that we actually tanked right down. Once we had this bearish divergence, that's when we exited our calls that we bought down here at 429. We rode them up to right here to like 533, and during this hour when price couldn't make a new high, even though Nimoy was telling us that we